All right, good morning, everybody. All right, so we have finished ACA 101. Next week, we will jump into ACA 101 Class 1, but we're at the very end of this. And what we're doing now is I have invited some people from Nexben because you guys have been asking for a lot of information on ICHRA. And on the ICHRA stuff, it's still ACA, but instead of doing individuals, we're now scaling where we're jumping in and helping a business, setting up an ICHRA, and then writing individual ACA policies for those employees. That's what this whole thing is about. So Nexben is a TPA, is that about right? Third-party administrator, is that right, Courtney?
Yeah, I kind of think of us as the technology behind the ICHRA administration. So yeah, you could use that term loosely.
Okay, perfect. So they set up the ICHRA, and then we do our job and we write ACA policies. So that's kind of where we're at now. So with that, Courtney is from Nexben. So we talked last week. I'm like, hey, we got to get some training for our guys done. So this is the first of 5, I believe, we're going to be doing. Is that right, Courtney?
Yes. Yep.
Okay. So we'll have 5 trainings. That way, you guys will be that do want to take advantage of the ICHRA. You all will have enough know-how that you can walk into a business and present something, and if they bite, then the fun starts. So with that, Courtney, I'm gonna let you take over. So go right ahead.
Sure. Thank you very much. I also want to say I have Linda here as well.
Oh, Linda.
And so Linda will be a great resource for us as when we actually start getting those bites, right? When we actually have the groups that are interested, and she'll be a great resource for you all. But hello, I'm Courtney, training manager here at Nexben. And just a couple things I want to kind of level set before I jump into the presentation. So I don't know how you all usually handle questions, but I like to handle them in a chat if that's not too different from how you would normally handle them. So at any time, if you have a question, go ahead and send them into the chat function. I'll stop at various points throughout the presentation. And if you want to come off mute and ask your questions at that time, you're more than welcome. But I just find that the chat allows you to send your question in when you think of it, rather than needing to hold on to the question and hope that you remember it when we get to a pausing point. So that will be a great way for us to make sure we get your questions answered. The second thing is there will be a copy of this presentation shared with you at the end of our time together. So you're going to have access to this material, and this meeting is being recorded, so you can always come back and listen to this presentation. We're really going to take ICHRA at like the high level view, that 1,000-foot view. Going to try to give you the basics, and then as we get into those additional sessions, that's when we'll get into more of the detail. But by any means, if you have questions, please feel free to ask them.
Okay.
All right, so let's get started.
Let's do it.
I want to start with the idea of a case study, just to kind of get your brains thinking about what an ICHRA could do for employer groups. So in this particular example, this is a true employer group that did decide to go with a Nexben offering, and they are a national freight transportation company. So this particular employer group had about 98 employees, which I know might be a little bit on the larger side for what most of you will start dealing with, but I wanted to kind of give you a good representation. And this particular employer group had multiple locations across different states. And so one thing that they were trying to do is create a solution where all of the employees in any state could have a really great benefit offering. The other thing they were trying to do is because they were self-funded, they had some astronomical claims that they were facing, and they were facing year after year about a 30% rate increase. And so they really needed to figure out, how do I rein those rate increases in? You know, I think all of our employer groups and many individuals are experiencing a year after year plan increase, and it's really becoming unsustainable. So how do we rein in those costs? And then the second thing was this particular the third thing was that this particular organization had a lot of turnover, right? Because they're in a freight transportation industry. So they really were looking to kind of increase the retention and have a tool in their pocket when they were out recruiting additional new hires. And they were able to accomplish all three of those items by moving to an ICHRA plan. So as you can see on the screen, both the employer and the employee experienced significant cost savings just by switching to an ICHRA, right? So the employer experienced almost a 20% savings on their insurance premiums. So it was able to solve for that 30% increase that they had been experiencing. The employees on average saw about a $2,000 savings per year in their health insurance premiums. So we're saving money for the employees as well. They were actually able to increase the participation in their plan. So I believe in this scenario, they had about 53 employees that were participating. And by offering an ICHRA, they saw their participation jump up to 59 employees. So now they have a tool that helps increase the retention and also help improve some of those recruiting efforts. So think about that, you know, as we go through the presentation, how an ICHRA can help both the employer save money and the employee gain freedom of choice by being able to select the policy that fits their needs best. So that's what we're going to talk about today, is the Nexben solution. We'll do a little bit of who is Nexben, why ICHRA, why now, kind of continue to build the case for an ICHRA. We'll get into the administration or how ICHRAs work, and then I'm going to give you a challenge at the end.
Sounds good.
All right, so who we are the technology company. So we're that financial technology company that supports the employer health plan administration. And the way we do that is we partner with the people who know best, right? We partner with insurance brokers like yourself. We partner with carriers, agencies, and by creating that network of experts, we can all play the role that we do our best work in. And we enable then the employers to gain freedom of cost effectiveness, right? We talked about those increases that the employers are facing. So we help alleviate that. And we allow the employees to have a substantial buy-in to their health insurance because now they select the policy that best fits their needs. So to simplify all of that, we connect that fractured benefits landscape with an end-to-end fintech solution that is transforming the way benefits are distributed, promoted, selected, and paid for. So a little bit about why ICHRA and why the market is ready for this type of solution at this very moment. So just to kind of level set, an ICHRA is an individual coverage health reimbursement arrangement. What it allows is the employer to set their employee contribution, and then the employee can use that contribution to select any individual policy that is available to them based on their zip code. So it really is just an HRA that can now integrate with individual health insurance policies. Now, these are relatively new to the market. They have been available as of January 1st, 2020. But we know that brokers like yourself are hearing about employer groups and hearing employees talk about ICHRAs. And so now is the time to really get up to date on what it is that they can offer. So here is a little bit of a survey that was done by Willis Towers Watson. And this survey was targeted at the employer group. And of the survey participants, 67% plan to prioritize controlling rising healthcare benefit costs over the next 3 years. 7 out of 10 employer groups expect to experience moderate to significant premium rate increases over the next 3 years. And over half of those who responded to the survey expect that already this year, their healthcare expenses are going to be over budget. Right? So they already know that the plans that they're offering their employees are not sustainable. Right? They're experiencing that pain now. And for the employees, we know that since 2011, insurance premiums have increased 47% more than wages at 31% and 2.5 times faster than inflation, right? So we know on the employee side of the house, for those individuals, it's also unsustainable. All right, so what are we going to do about that? Well, that's where the standard individual coverage ICHRA kind of comes into play, because it allows the employer to define that monthly contribution that they want to contribute to each employee. So that's going to minimize their risk, because now the employer knows exactly what is coming out of their budget for healthcare expenses month after month. Now, what it allows the employee to do is select for more plan options, right? So the employee can now say, you know what? I don't take a whole lot of medications, or actually, you know what? I do go to the doctor's office quite a bit, right? And so now the employee can say, I need a plan that is structured like this, and has the ability to go select that policy. Additionally, an ICHRA can work for any size group because there are no participation requirements. So when we look at groups who fit, we'll definitely find success with those small employers, those mom and pop shops who may not even be offering health insurance at this time. But we'll also see that this can work for some of those larger groups who may have participation requirements or may be facing tax penalties for not offering coverage that meets affordability, right? So we have a wide target audience. Now, with any solution, there's definitely the plus side, right? We talked about all of the great things that a standard ICHRA can do. But what is being left out are a couple of key items here. So the standard ICHRA requires a reimbursement process. So what that means is the employee has to go out and shop for a policy, pay for the premiums, and submit their invoice for reimbursement by their employer. That's not going to really work, because we just talked about how all of the insurance premiums are constantly rising, right? And if you're asking the employee to front these dollars, that's money coming out of their pocket. So that's one way that the standard ICHRA kind of falls short. In that same model, now the employers have to figure out, well, how do I manage this reimbursement, right? How do I make sure that my employees get the dollars back into their pocket without causing all the mess in my bookkeeping, my record keeping? And the third issue that an employee may run into is, in a traditional group health plan, the employee may have had 1 or 2 plan options that their employer was offering them. Pretty easy to select when it's maybe the best of a worst case scenario. But now when they're shopping, they could have 10, 20, 30 different plan options available to them. And who's left to help them make that plan selection, to walk that employee, that individual, through enrollment and making a policy selection that best fits their needs? So that's why at Nexben, we do it better with the Nexben solution. And I want to walk you through kind of that ecosystem, how I told you we're bringing everyone together to play their part. So here's kind of the roles that everyone plays in the solution. The first is a distribution partner or a broker like yourself, right? And that's where we really allow you to partner with your clients like you're used to doing, right? So help the client find the solution that best fits their needs. Talk to them about contribution strategy, maybe provide a benefit comparison so they can see those policies side by side and understand that, yes, an ICHRA is going to help you save your bottom dollar and your employees' money as well. Then that's where the employer comes in and they have a portal where they log into and they manage the open enrollment for their employees. They make sure the employees are logging in and completing their policy selection. Now, you as the broker, you can assist the employee in that enrollment process, right? So the employee can go direct to work with an independent broker. They can use an enrollment partner, or they could even go direct to the marketplace to shop for a policy. That's the great thing about Nexben is we are not concerned about how the employee completes their shopping experience. That's up to you to manage that relationship with the employee or that individual to make that policy selection. But what we do care about is when that policy is being purchased, we're going to provide a unique Nexben account and routing number. What that allows is at the time of enrollment, the employee automatically has access to their employer's contribution. That means there's no need for the employee to be reimbursed, right? Because they're already at the time of shopping going to have access to their employer's dollars. And of course, what we'll do is we'll take all of the premiums that are due back to the carrier and we'll distribute them per the policy selections by the employee.
Hey, Courtney,
Now, I see a lot of questions coming in. Yeah.
I was going to ask, should I be answering these?
If you want to, we'll go ahead and I'll start at the top and we'll see what questions.
Yeah. So let's hit the first one from Rosalind. So participation in a traditional group, participation rules, 70, 75%. What do you see out there? And then I'll kind of chime in with what I know here in Texas.
Linda, could you speak to that a little bit?
Yep. So in a traditional group, depending on the size of the group, they can be penalized if they are not hitting between 70 and 75%. They're actually going to increase the rate on that traditional group plan. In a small group, I'm not going to say it's prevalent as much. You're not getting their member level rates. The carrier can always refuse to quote or enroll a group if they're not meeting a specific participation. I can speak from Michigan. I don't see many carriers refusing until you get into the large market. I can't speak for other states as clearly. I can tell you with an ICHRA, participation is not a factor whatsoever.
Yeah, and I'll tell you, my over here in Texas, same thing, guys. If you don't hit a certain level, when she says penalized, what they do is they load the premium. So in other words, they're going to say, okay, the average premium may be $1, but because you're not meeting the participation rules or you have low participation, we're going to load it with maybe instead of $1, maybe it costs you $1.25. Okay, so they will do that. And then some carriers, you're below a 50% level, and they're just like, nope, you're not meeting our requirements. We're not going to quote you. Okay, so it's going to be dependent on your area. All right. Next question. So after ICHRA is in place, what platform is used to enroll the employees? Will they be using a Nexben platform, or will they be able to use Health Sherpa, or if they're in a state exchange, that state exchange's enrollment platform?
I can answer that one too. When they are set up as a broker on our platform, they are going to, if they have a specific place they want employees to shop, they need to provide that to us as an HTTP address, and we can load it into showing as the enrollment partner for that employer group.
Okay. And
So
then,
if they
and
use Health Sherpa, they give us that link and we're gonna attach it to them as a broker.
so for you guys that are sitting there wondering, well, how do I do that? Health Sherpa will give you your own personalized PURL. So your link that has your NPN embedded, and then that way, when if an employee self-enrolls, it will embed your NPN in there, and that way you get credit and get paid for it. State exchanges, I don't even know. I don't write in any state exchanges. What do you know about that, Linda?
If it's a state exchange, we're not gonna attach to it. In a situation like that, we are definitely going to encourage that broker to work very closely one-on-one and help the employee go through it. State exchanges are their own beast.
I know. Yeah, I agree. Yeah. So to answer that question, guys, you're just going to have to, hey, get with your employer if it's a small group, or HR if it's a larger group, and just say, look, when it's time to enroll, I'll handle it. Have your employees come to me. Continuation on that question. Will the business owner also be included in ICHRA? Can the business owner enroll themselves?
I can answer that too. Can you answer?
Okay.
Do you want me to answer that, Courtney?
No, go ahead. You're doing great.
Okay, so for owners, a few things, and I can pop this in the chat so you actually can write it down. There's a few different scenarios. If the group is set up as a C Corp, yes, the owner can participate in the ICHRA. If it's an S Corp, a partnership with more than 2% ownership, or an LLC filing as a partnership, the answer is no. If it's an LLC filing as a corporation, it's a yes. They can also participate with those ICHRA funds. Like I said, I will put that information in the chat so you can jot that information down.
Hey, Linda, well, maybe a way to simplify that, they have to be W-2. They can't be 1099. Is that a good way to simplify it, maybe? Business owners, if the business owner is just 1099ing themselves, or keeping the money and not W-2ing themselves, they can't get in.
Right.
So they have to be a W-2 employee. And I guess to be a W-2 employee, you have to have a corporation and pay yourself. My guess, right? Am I close on that?
I'd say you're close. I will say this. In traditional group setting, this is different than what it is in the traditional. Traditional and you can do a partnership, you know, when you have multiple partners who are filing K1s, blah, blah, blah. This in an LLC as a partnership are allowed traditional, are not allowed ICHRA. Just things to keep in mind.
And you'll guide the agents on that, right? Once if they're bringing a group to you, you'll be able to help them out with that.
I'll be able to give them the same information I just gave. I will teach them how they have to ask for certain tax documents to verify.
Okay, perfect. All right, a couple more, and then we'll continue here, Courtney. This is from Neil. Pain points. Why would an employer offer ICHRA, and why would an employee use ICHRA?
Yeah, I don't know, Linda, I'll take it and then you can add whatever you like. So
Okay.
I think the major pain point that an ICHRA solves for an employer is twofold, right? We talked about how in the current healthcare model, the employer is constantly facing year after year rate increases. And the current model or structure, they're not seeing any relief from that, right? We already saw that 54% of employers are already over budget in their healthcare spending, and 7 out of 10 expect to receive significant increases over the next 3 years.
Mhm.
So budget is a main factor for the employer, the ability to control those costs. Now, we know the employer is concerned for the employee. They don't want to just give the employee quite frankly, garbage, right? They care about their employees. They want to make sure that they're setting them up for success. And I will say that ties into the employee pain point, because in the current system, the employee often has one or two plan options from their employer. They don't really fit the needs of the employee. It doesn't give them the coverage that they're looking for. It doesn't make a difference if I have myself on the contract or a family of 8 on the contract. We're all getting the same coverage. Doesn't matter if one of us lives in a rural county and the other one lives in the city. We're all getting the same coverage. And so with an ICHRA, you're really allowing the employee to select the policy that meets their needs and their family's needs. So now if I have a situation where I do need more insurance benefits, more rich benefits, I can select that policy for myself. I have the ability to actively participate in my coverage selection.
Beautiful. And then I'm going to hit you with one question, because this is something I've dealt with, the pay or play rule, 50 and under, 49 employees or under. You mentioned that if a business does not have insurance, I guess on the size of their business, they may either have to play the game and provide group coverage, or there's a possibility they're going to pay a penalty. And that penalty varies whether those employees get a plan on the marketplace or not. Can you elaborate on that?
Sure. I will give you a short answer. And then I also want to say we have an on-demand video that speaks exactly to affordability testing. I'll make sure to get that over to you guys after our presentation today. Okay. So really the player pay mandate comes into effect for those large employers, right? If a large employer offers coverage that does not meet affordability requirements, and therefore the employees go out to the marketplace and accept a subsidy, then they could face, I think for 2023, it's 267, Linda, I don't remember it's somewhere around that, per employee penalty. And that penalty is going to be assessed to them by the IRS. So with an ICHRA, all of the policies are going to be ACA policies, right? These are individual policies. And so the employer already knows that the policy that I'm offering my employees is going to meet ACA mandates. It's going to meet MEC, or minimum essential coverage. So they can check that off their list. So now all they have to be concerned about is my policy meeting affordability requirements? And they can do affordability testing. And there's a couple of safe harbors that they can use when they're doing affordability testing to make sure that, yes, my policy is meeting affordability requirements.
Beautiful.
Yeah.
All right, cool. Keep posting your questions. Let's go ahead and continue there, Courtney.
Perfect. All right. So I wanted to just kind of go over that payment solution and before we jump into how ICHRAs work, because this is really what makes the reimbursement model not even a consideration, right? Because we're taking the reimbursement out of the ICHRA. So what we're doing is at the easiest level of it, the employer is going to say, I want to give my employees $300 per month. The employee shops for coverage, either maybe through your Health Sherpa link or maybe through the marketplace, whatever shopping solution they find the best for them. They're going to use their Nexben account and routing number. We're going to get the data back into our platform, and we then generate the premium invoice for the employer. Doesn't matter if there ends up being 2 carriers or 10 carriers. The employer can go out to their portal. They're going to see one consolidated premium bill. And with a click of one button, they're going to be able to distribute the dollars to the correct carrier. So we're going to make sure that we're directing the premium payments to each carrier based on that individual employee plan selection. Now, what's great about this is, let's say the employer is giving the employees $300 a month. The employee selects a policy that's $350 a month. that remainder or the extra $50 can be payroll deducted for the employee. So it feels just like that traditional health insurance plan, right? There's no need for the employee to log into the carrier's portal and make a monthly payment. All right, so with that, I want to give you a little bit of information on how an ICHRA works as far as some of the plan design and eligibility. So when we talk about who is able to participate in an ICHRA, right, it's all up to how the employer wants to develop their plan design and employee eligibility. They can do so using the 11 employee classes that are defined by ICHRA regulation. So one thing I want to call out here is seasonal and part-time employees. If the employer allows, seasonal employees and part-time employees can be eligible to participate in an employer-sponsored benefit, right? So that is a key differentiator, because now you have many employees who have never before been eligible for health insurance by their employer able to participate in their employer-sponsored benefits. So there's a few rules that were put into place to make sure that the offerings do not discriminate. One, that the employer must offer the same amount of reimbursement or contribution to all employees in a class. So if I say I'm going to give my full-time employees $300, every full-time employee gets $300. Employers cannot offer an ICHRA to an employee who is offered a traditional group health plan. One thing is that, yes, the employer could say, you know what, I want to put my salaried employees on the traditional group health plan, keep them there, but I want to put my part-time and my seasonal employees in the ICHRA. They can do that. They just got to make sure that they're keeping it along class lines. Just as I said, an ICHRA may be offered to one class and a traditional group health plan can be offered to another class. Now, should the employer want to keep their traditional group health plan, there are some class size limitation guidelines that need to be followed if they're utilizing any of the 5 classes that are seen on the screen. And if they use those classes, then they just need to make sure that the necessary amount of employees reside in that class. So for example, 10 employees for an employer with fewer than 100 of employees. So some ideas of how we've seen class structures play out. For example, a golf course, right? Golf courses tend to have a lot of seasonal employees. So we've seen them offer the traditional group health plan. They keep their full-time employees on that, and then they create an ICHRA for their seasonal employees. Or maybe even a consulting firm where they have employees across multiple states, where they might have their traditional group health plan for employees that are in California, and they might have the ICHRA for the employees that reside in Washington. Now, when they're defining, or when the employer is defining how much they want to contribute to the employees, it can be as little or as much as they want. However, the amount set defines the maximum amount for which the employees can be reimbursed. So one other thing that an ICHRA allows is using a 1-to-3 ratio, or up to a 1-to-3 ratio, to define the contribution allowance. The reason why an ICHRA allows this is because we know that individual market policies increase based on age, right? They're age banded. So now you can create a more equitable contribution by utilizing a 1-to-3 ratio. So for example, the youngest employee in the class may receive $100 per month, the oldest employee in a class $300 per month. And it can be age banded as well. So you can stagger that contribution throughout the range. Again, as long as you're staying within a 1-to-3 ratio. So let's take a look at a few of the most common contribution strategies. These are what you'll see on the Nexben platform. The first is employee only, and that's simply saying I want to contribute equal amount of money to all of my eligible employees. So I'm going to give all of my eligible employees $300 a month. Second one is employee only age banding. So like we just saw, I'm going to contribute $100 to my youngest employee in that class, and I'll contribute $300 to my oldest employee, and I'll create those age bands. And then we have employee tiers and employee relationships. So what this means is two things. If I am if I'm an employee and it's just myself on the policy, versus if I'm an employee and it's myself, my spouse, and my 3 dependents, there's going to be a vast difference in the premium due each month, right? So these strategies allow to take that into consideration. So the employee tiers says, I want to give equal amount to, I want to create an amount per tier. So employee, employee plus spouse, employee plus children and family. Employee by relationship says, you know what, I want to look at who is on the policy in their relationship to the employee. So I'll give the employee $300. I'll give the spouse $200, and I'll give every dependent $100. Now, I know I just covered a lot. I do have an on-demand video specific to contribution strategies as well, so I'll make sure to give you access to that after our presentation today.
Sounds good.
But I do want to see if we have any questions that have come in.
We do. Let me pull these up. We got a couple. Okay. So from Neil, why would an employee get set up on an ICHRA versus just getting a plan directly on the marketplace?
And so from the employee, I think one thing we're going to cover in a second is you can't double dip, right? So if I'm an employee and my employer is offering me an ICHRA and the ICHRA is deemed affordable, I cannot waive the ICHRA coverage and then go to the marketplace to get a subsidy. Now, if the ICHRA is deemed unaffordable, most definitely the employee can waive the ICHRA offering and go to the marketplace to see if they qualify for a subsidy.
Courtney,
So,
what determines affordable and unaffordable? That's the contribution, right?
that is the employer's contribution, correct? Yes.
So
Yep.
the employee doesn't have a choice, really. It's all dependent on whether the employer, the amount that the employers contribute.
Yes.
So,
yep.
So Neil, it doesn't matter, if they work for ABC company and they offer the ICHRA, the employee stuck. They're going to decide which way they can go based on the
Now,
contribution.
I will say, I know sometimes an on-marketplace policy might differ a little bit than the policy that is offered by the carrier off exchange. Now, obviously, we just said enrolling on marketplace takes a lot more work and it's not as user-friendly. But if there was a specific policy that the employee wanted, they can go on exchange to enroll in that policy. They just wouldn't be eligible for a subsidy.
Okay.
Yep.
Yep.
So we're not controlling where the employee can shop for coverage. That's the main point I wanted to make. Yep.
But the employer is deciding, hey, if they're on an ICHRA, they're on an ICHRA. Hey, now the employee got to figure it out.
Yep.
Remember, this is an employer decision, not an employee decision, whether there's an ICHRA or not.
Yep.
Okay, beautiful. All right, next question is, this is from John. is the amount that the employee puts in, is that considered pre-tax money? I guess their premium?
So what I'll also share with you, I have a lot of great resources, is an ICHRA guide, and it's going to talk about the pre-tax versus the post-tax. It all depends on where the employee shops. So if they purchase a policy off exchange, then their remainder is going to be pre-tax. If they purchase a policy on exchange, then their remainder is going to be post-tax.
Okay. All right. And the last question that we have, and we'll continue here, is from Rosalind. What if the employee has outside insurance through a spouse? Could they drop? Let me make sure I'm doing this right, Rosalind. Could they drop that outside coverage and participate in ICHRA?
Yes. And so what we're going to talk about actually next is if I have ICHRAs will open up my, sorry, I'm stumbling over words. My employer offering me an ICHRA will open up a special enrollment period for me to come off my spouse's policy and enroll in the ICHRA coverage. So yes, they can do that.
Beautiful. Okay.
All right. Anything else?
Nope, that's all the questions for now. Go ahead and continue, Courtney.
Perfect. So great segue. What we just talked about. So remember, the ICHRA itself is an employer-sponsored benefit, but the policies that the employees select are enrolling in are individual policies, right? So when we think about the ICHRA, it is a calendar year product. So what that means is because the policies are individual policies that are subject to ACA mandates, the policies are going to renew January 1st of every year. So an employer can come on to an ICHRA at any time. They could say, you know what, I want to move to an ICHRA effective April 1st. That's great. What's going to happen is it will open up that SEP for the employee to select coverage. They'll go make their policy selection, and then they're going to renew January 1st. So they're going to have that shortened plan year. Now, because we're aligning with the individual enrollment timeframe, the employees must make a coverage selection and enroll in a policy by the 15th of the month prior to the effective date. Right? So if my employer is offering an ICHRA effective January 1st, the employee must be enrolled in the policy by December 15th. So we're just aligning it with those ACA regulations.
Correct.
Now, I think we kind of led into this a little bit earlier in the conversation, but who could benefit from moving to an ICHRA? What types of employers are having success with an ICHRA benefit? We definitely see a lot of success in that small group market. And it's really a wide variety, right? It's your mom and pop shop, as I said. Maybe they don't have health insurance benefits for their employees at this time. It could be some of those small municipalities or the fire departments that are in those smaller municipalities. Associations, co-ops, and franchises. That kind of fits into that hospitality or entertainment industry, where they may have a lot of seasonal employees or a lot of part-time employees, as well as home health care. Now, if we look at the large group side, we see a lot of success with groups that have participation issues, or they have that higher claims rate. Maybe they're self-funded and they're facing those rate increases. An ICHRA can help control costs for that large group as well. So kind of wrap up this section, and then I'll pause for questions as well. So to recap, right? When the employer says, yes, I want to go with an ICHRA, they set their defined contribution amount with no minimum or maximum contribution requirement. The employee makes a policy selection, and if they select a policy that is over their employer's contribution, not a worry, their remainder can be payroll deducted. Now, if the employee selects a policy that is under their employer's contribution, they do not retain those dollars. Those dollars will, be retained by the employer. The employer can choose to structure their eligibility criteria using 11 different employee classes that are defined by ICHRA regulation. And Nexben's ICHRA solution is going to be a reimburseless process, right? So we're going to reimburse for the insurance premiums through our use of the BPID, right? Or as we call it, the Nexben account and routing number. All right, any other questions?
We do have a
before-
couple questions here. This is from Shri. What if an ICHRA setup and an employee already has a marketplace plan?
Mhm.
What happens then?
Yes, they would want, if they already have a marketplace policy and they're happy with that policy, great. They still need to go out to the marketplace and report the SEP. They'll be able to keep their policy, but they'll just need to make sure that they go through the process of reporting the SEP.
Okay. And next question is, does the employer evaluate contribution amounts annually? So they set one amount here and then next year they can change it to something else?
Yeah, Linda, do you want to speak more to that?
Yep, every year, once they're in, they will receive from Nexben data. We call it a renewal package. Obviously, there's no specific rates because everybody could have a different plan. But what we're giving you is information on what the average rate increase is going to be in a specific state. So the employer can use that information. And if it's a large employer, make sure they're keeping themselves meeting affordability. If it's a small guy, they may just look at it and say, I'm going to maintain where I'm at, or I can increase my contribution.
There you go. All right, two more questions. This is from John. Other than the premiums, what are the costs to the employer for setting up an ICHRA?
Yeah, we're actually going to go into that next. So
Perfect. Okay,
Yeah.
so we'll dive into that one. And then Shri is asking, will we be able to use this PowerPoint, or is there another one that we can use to explain ICHRA to employers? Or do you have like a cheat sheet or an agent guide?
yeah, I can point you to the resource hub as well. So that has items specific to the broker, employer, and employee.
Perfect. Okay.
All right. So the Nexben solution in action, I'm going to talk a little bit about who does what, roles and responsibilities, of course, that financial component as well. So this is kind of an overview of who does what in the breakdown, but I really want to focus on you as the broker or distribution partner in this component. You might be thinking, all right, so what do I have to do here? Really, it's educating the employer group on the responsibilities of an ICHRA, right? Helping the employer group set their contribution strategy, navigate the platform, making sure that the employer is making sure that all of the employees are making a policy selection, and of course, assisting the employee with that enrollment. Sorry, I went too fast there. So we talked about, how do you get paid? How does Nexben make money off of this? And so that's kind of where we're fitting into next. So really what's great about working with Nexben with an ICHRA is you control your compensation, right? So you'll have the opportunity to set your advisory fee per employer group, right? So that is dollars that you control. So if you have an employer group that is, maybe they need more hand holding as far as walking every employee through the enrollment process, or you have an employer group who says, nope, we've been through this before. We already have done the ICHRA game. we feel a little bit more confident they might need a little bit less of a, less hands-on approach. You can control your compensation by setting your advisory fee per group for your service and expertise. What we'll do is, on behalf of the broker, we'll provide monthly automated billing services for your advisory fee, meaning collecting them from the employer group and payment back to you. So there is a $30 per subscriber per month administrative fee that is billed to the employer group, and Nexben does retain that administrative fee. And really, it is for access to the platform, access to all of the automated billing features. And so that is maintained by Nexben. So the advisory fee that you would set would be on top of that. So for example, if you set a $10 advisory fee, then the employer group would see a $40 per subscriber per month fee. Linda, do you have anything to add to that?
Nope, that sounds really good.
Okay.
And what I'll add, guys, we're in this to make some money too and help our prospects, which is the employer. We're going to make our money on the ACA. Think of this, the money here is, I don't think it's to be made on the establishment of the ICHRA. Guys, we're making our money with the individual ACA products that we're writing for those employees and possibly their spouses and their kids if they've got kids. So think of that's where the money's coming in, not on the actual ICHRA. I kind of look at the actual ICHRA, if you put an advisory fee, I mean, you can if you want to maximize it, but that's going to be, you may price yourself out if you do that.
Mhm.
Yeah. Yep, it's all, and again, the flexibility, right, of how you choose to structure your your compensation. If you're going to maintain broker record and keep those ACA commissions, you might not feel the need to set an advisory fee, right? You might say, you know what, I'm going to be competitive in the market if I don't have an advisory fee. So that it really is how you choose to structure. All right, so just a summary. Who is Nexben and why ICHRA now? Well, Nexben is here to connect the entire ecosystem of players, right? We're here to make sure that you don't have to go it alone, right? We have tools and resources, and we want to make sure that you're successful. We have heard the pain points of the insurance industry where the employers are simply saying, I can't do it anymore. This is not sustainable, right? So how an ICHRA works is providing that controlled budget. Employers set their contribution strategy and the employees shop. Nexben will take care of the billing. And next time we get together, or one of our future sessions when we get together, we'll take a look at the Nexben platform, the Nexben solution itself, as easy as self-serve and renew.
Great. So I got a couple of questions here. One is will the agent be the agent of record? And guys, yes, that's the beauty of working with Nexben, is the ACA policies that you're writing are yours. They don't belong to the organization. They don't, unless you're not licensed in the state. I think we talked about this. Then that's between me, Linda, and Courtney. But if an employer has a branch in a state where you don't have a license, then with Nexben, they can take care of that employer. But in the state that you're licensed in, that you're working, you're the agent of record. The beauty there is you're going to get the commissions. You're going to get bonuses if there's bonuses available for the time period that you're writing and that carrier. So it's all yours. That's why I like the partnership here with Nexben. Are you able, and this is a great question. I don't even know about this one. So Courtney and Linda, are you able to include dental and vision into this ICHRA?
Linda, do you want to take that?
I will. At this time, no. Ancillary is something, future enhancement that Nexben is going to allow. I will add a little caveat onto that. A lot of individual plans, and I can't tell you percentages, but I have found There are many individual plans that have adult dental and vision included. If the employee chooses one of them, that is fine. But know that that ancillary coverage ability is coming in the future with Nexben.
Gotcha. And I will tell you guys, I know there's some carriers out there that would do list billing. So if you you go with a carrier and you start doing some individual plans and the employer wants to take care of it, you can do a list bill. Otherwise, I guess for now, the agents will be, which is a good thing, you can write individual dental and vision plans for those employees. Okay, couple questions, or last question here from Rosalind. I guess a downside. Okay, so she's asking, I guess a downside is those of us who already have a book of business, this takes away a lot of our time to stop and help an employer set up. This is what I would tackle this, and then you guys can chime in there. But if you're working with an employer in the past before ICHRA, the employer, like when I barely started, I was working at a lot of hotels. I'd go into a hotel, I'd give a presentation to the cleaning staff, all the employees, and then I would enroll every employee. Okay, the employer did not, if he was at 50 and under, he was just like, hey, you take care of them, we're good to go, they're happy. Now, if the employer wants to contribute, okay, they're 50 and under, they don't have to, if they're under 50, they don't have to do anything. There's no penalty for small employers. So what it comes down to is if a small employer does not want to set up an ICHRA, they don't have to. Okay, they're not going to get penalized. They don't have to pay or play. These guys, if they want to provide a benefit, you can go in there and enroll them individually. You got to find an SCP to do that. Okay, if you don't have an SCP, well, the creation of an ICHRA does create an SCP to get those people in. So it all depends on what the employer wants to do. It's a benefit, it's a retention tool, it's a recruiting tool. If the employer doesn't want to do it, then just go in there and tackle them individually. What's your take there, Courtney and Linda?
I agree. Yeah,
Yeah.
definitely.
Yep.
Yeah, I think this is for the employer that wants to provide something. Hey, I want to help my employees out. I want to give them $100 a month, or if it's 50 and over, they have to make those contributions affordable. And there's a calculation for that. And I'm sure we'll tackle that later in some other trainings, but that's 50 and over. For me personally, guys, and I think for a lot of y'all, we'll probably be targeting small business America, 50 and under. Your businesses that are in your strip shops, your florists, your barbers, your beauty salons, your tanning salons, the florist, I don't know if I did that already, but restaurants. That's kind of my target market. When I go into business and it's 50 and over, that's a whole another ball game, which it's tackleable, but it is another ball game. Let's see here. So guys, any other questions? Rosalind, let's say I'm often thinking of time it takes to re-enroll everyone during OEP. I'm going to take more single agent. Maybe we can definitely talk about this, Rosalind. It just kind of depends on who you're targeting. I think with ICHRA, it's a great way to scale. Instead of finding 50 or 40 individual people, one employer with 40 employees. I mean, you can knock it out of the ballpark there. It's a great way to scale your ACA business. Any other questions, guys?
Well, while those come in, I'll just do a final wrap up. So I told you I wanted to give you a challenge, right? And so this is the challenge. If you have one lead maybe it's already in your book, or maybe it's as we just said, the hair salon and the strip mall, or the florist or the restaurant, one employer group that you think, what, I think that this could be a good fit. Come with that group to Linda and she'll get you ready to quote. Now we're going to cover quoting in a future session, right? But this is, this is now. If you have a group right now in your pocket that you think could benefit from this, then let's do it. We have our curriculum that we're going to do together, and so we'll cover quoting in a future session. So if you don't have one now, that's okay. Stay along with us for the ride. learn all of the ins and outs for the ICHRA administration. But if you have one lead right now, then there's no need to wait. Let's get it rolling.
Yep. And I will tell you, we've got more training, guys. We'll come up with a schedule. I will share it with you guys. I just shared the slide deck with you guys on the chat. So if you want to download that. And like I said, yeah, you may not know it all right now, but take advantage of Linda, and in a good way. Hit her up with a potential group that you have, and don't wait until you get all the training done. And last question, this is a good one. I like this. Any special certifications that are needed to sell ICHRA?
No, as long as you are licensed and appointed with the carriers, then that's all you need. There's no special certification to sell ICHRA.
Yep, I agree. And then Neil, I think his question is does this mainly work best with the health Sherpa states, the federal states, the states that participate on the federal marketplace? I think it's easier, but no, I don't think that's true. If you're in a state-based exchange, those employees still need insurance. You just got to use a different platform to quote them. And if you're in one of those states, you're New Jersey's one of them. I don't know how ACA works in that state, but I would not do it. I think that makes sense. Two double negatives, not do it because you're in a state-based exchange. It's just a little different ballgame, but you can still make it happen. All right. Well, good. Well, hey, Courtney, Linda, thank you for being on today's call. Guys, I'll have this recorded and I'll share with you all later if you want to revisit. But we've got a whole series of trainings coming on. It won't be at this time because we'll jump into regular ACA 101. We'll have a separate time in the future, which I will share. And we're going to dive down into this. Here's the beauty of this, guys. There's no other ICHRA training out there. There's nothing. I mean, I've tried looking, I tried educating myself. This is not an easy product. And I'm glad it isn't, because it's going to knock a lot of agents out. The ones that grasp it are going to be able to capitalize on it. So please join us on our future trainings that we're going to have.
Hey, Luis.
Yes.
I have one quick question.
Go ahead.
If I'm licensed out of state and I wanted to sell ICHRA, like I'm in the state of California, but I am working ACA in Arizona and Florida, how do I work that business? Is that possible, or should I be in the state to sell ICHRA?
Linda?
We have brokers who handle multiple states. Honestly, as far as reaching the groups, you're going to have to figure out how to reach your groups. But if you're appointed in any state you want to be, and they happen to have other locations, that's not a problem. I'm just going to say getting in front of them to do the presentation. It's a lot of this now, a lot of the webinars. It's going to be up to you how you do it, but there's no problem as far as ICHRA as to where you're going to introduce it.
Okay, wonderful. Thank you.
You're welcome.
Okay, guys, stay tuned for more training. It'll be coming your way. And again, Courtney, Linda, thank you for today. I appreciate it.
Yeah, thank you very much. Great to be here.
Okay, bye, guys.
Bye.